the debt spiral? Are we seeing it play out in real time? Even with, a so-called conservative government in the United States, they couldn't help themselves but to, raise the debt ceiling once again. So it to me, and remember, like the whole political charade, because it was like, no, we're going to stand our ground. We're going to not do anything. But I'm looking at it from the outside in, and of course, I'm not as experienced as you two gentlemen. And I'm like, this is a joke. I don't think they have a choice but to. They don't have a choice but not to raise the debt ceiling, because if they don't raise the debt ceiling, the whole system collapses upon itself. I want to get your guys' thoughts.
Nico, here's a secret: there is no debt ceiling. That's the secret, and everybody knows.
James is going to have a great answer, so I'm going to go even more quickly. Okay. See, the funny thing is, debt or interest expense compounds, right? And therefore, it's what's called an exponential function. I need you guys to do some math here with me. An exponential function looks like this, right? It's a parabola. And why is it an exponential function? Because the present value, the future value is calculated as the present value times 1 plus R, which is the discount rate or the 10-year US Treasury rate for a number, to the power of n, the number of years that this has grown. So when you have something to the power of n, you fucking knuckleheads, that's called an exponential function. An exponential function looks like that, which means the debt was growing on a relative basis the same in the past. It's just that the debt burden was so much smaller. Now, all of a sudden, it's hit a point where the interest expense is $1 trillion. That's the number that's opening people's eyes. It doesn't matter. Yes, it has accelerated because it's called the second derivative, the rate of change, okay? But it's all mathematics of a debt spiral because interest expense compounds. End of class. That's as simple as I can lay it out. If you don't understand what I just said, go back to grade 11 math and listen for a fucking change, okay? Mathematics is important. And if you don't understand how a debt spiral works, you can become the Prime Minister of Canada or perhaps Joe Biden, okay? Because those guys have no clue about exponential functions. I am certain of that.
The answer is, we're in it. We're already in it. There's no way out. We just like Greg said, we operate in a perpetual deficit, and we have to fund that deficit with additional treasuries. And the problem is right now we're trying to battle inflation. And so you've got the Fed raising rates in order to battle inflation, and it's causing the interest expense on that debt to go higher. And so you have to borrow more money every year in order to pay that down. And you've got half the debt it's maturing over the next 3 years or so. And so you're seeing the expense just go through the roof. And we just saw it with what you talked about, Nico, the debt ceiling being raised. Well, what they did is they just eliminated it basically. And they said, okay, we're not gonna approve any more spending. But the Treasury can issue as many bonds as they need to cover all of the expenses we have, which are quite a bit, obviously. So now the issue is that as they issue more debt, and they had to go back and fill the Treasury general account, which was down to just a $30 billion, which they can spend, before we even have our first cup of coffee in the morning. Well, that TGA account had come down from about $500 billion. So they had to fill that back up. Number one, they had to pay for all the debt that was maturing in June. Number two, they had to pay for all the intergovernment tabs that they ran up because they used extraordinary measures to avoid tripping the debt ceiling. Number three, so you saw the Treasury issue $1 trillion worth of debt this past month. And so it went from 31.5 trillion to 32.5 trillion in just a few weeks. And so why did that happen? Because of what I just said. And because of what Greg is saying, is that the cost of doing business for the United States is getting higher every single year. And so we have to issue more debt. And so we're in this spiral that we just can't get out of. And so will the US collapse today, tomorrow? No. Will we get out of it? No. Will we eventually collapse? Yes. Period. It's just it's just there's no way around it. There's just too much debt. You can see in my pinned tweet, I've got a thread of all these different things I've talked about, but in that debt spiral 201, the second one I talked about, the US Treasury itself put out a chart. It's a visual, and it was in this report that they issued maybe 5 or 6 months ago, and it was called an unsustainable fiscal path. And basically what it's saying is that the Treasury is trying to tell Congress that they can't keep issuing debt like this. And yeah, keep going down. It's down a little bit. But keep going. There you go, second one. So, and in there, you'll see that there's this chart. And what Greg is talking, what's important about this is this chart in and of itself is astounding, and it's mind-boggling that it's this bad, that they admit to it. But the important part is that this chart just shows a straight line increase. Keep going. That's an important one too. You can see how it's just growing bigger. The deficit's growing bigger. The debt is growing bigger. Keep going, and then keep going. And then this right there, they admit that it's out of control, but that is a straight line. And what Greg is talking about, and what they don't admit to, is that line is going to go parabolic, and that's the problem.
Oh, so they're admitting to this already being excuse my language, but I'm gonna say they're already admitting it for this to be an absolute clusterfuck. But this is gonna be a parabolic clusterfuck.
Yeah,
is what you're saying.
That's optimistic. It's not going to happen like that.
600% of GDP. Well, it looks good on a graph. You think it actually works? I don't know. I doubt it, but
oh god,
you know.
Oh god. Well, and it all stems by their ability to print. I know, with the bonds and the Fed and all that stuff, but if you just simplify for the sake of the show, right? It all stems from their ability to just print money. It really stems from that, and
that's right.
And that's how they pay for everything. And they have basically an Amex with no. It's a kid with an Amex with very wealthy parents, and the Amex has absolutely no limits.
You remember when you got your first checkbook? You may not have, because you're too young.
No,
Greg,
no.
when you got your first checkbook?
I'm not that young. I remember.
I can write checks forever. I can buy anything.
Yeah.
Oh, I got to have the money in my account for this? Oh, okay. Yeah. But the issue here, Nico, is, and here's a sobering issue, is we're crowding out the marginal balance sheet that can take on this debt. That's the problem. And so what you've seen in the last month, what we did is we issued about $1 trillion worth of debt, and we drained a lot of that, the difference between the debt that was maturing, that number, which was $400 billion, and the amount that they had to issue on top of that. So debt matures, investor gets cash back, they plow it into more debt, right? But there's still a VIG there, right? There's a difference, a delta there between what they need to issue, which is $1 trillion, and the amount of debt that was maturing that they need to reissue. Okay, right? So think through that. The debt matures. The Treasury doesn't really have enough money to pay for that, so they issue more debt to pay for that. And then that debt that matured, that investor gets capital back, he plows it into that new debt, but they still have more debt that they have to issue. So where does it come from? It came from the reverse repo market. So they're soaking up that. But once that's gone, it's not like China and Japan are rushing out there and Russia are rushing out there to buy our treasuries anymore. They're not. And so you've got these balance sheets of these corporations and investors, worldwide investors. You've got State Street. You've got, CalPERS. You've got Texas Teachers. Once they can't buy any more debt, once they're crowded out, who's going to buy it? Well, they're going to print money and buy it. They're going to print money, put it at the Fed. The Fed's going to go and have the dealers buy it. The Fed's going to buy it from the dealers, give them the cash that they were just given. And it's just a whole charade. And that's the way it's going to happen until it doesn't.